Taiwan is one of the most technology-driven economies in the world. Its semiconductor industry produces over 60% of the world's advanced chips, powering smartphones, artificial intelligence, and the global digital economy. But powering that economy requires enormous amounts of electricity. And that is why Taiwan is now accelerating investment in renewable energy infrastructure. Taiwan has set ambitious clean energy targets as part of its long-term energy transition strategy. By 2030, the country aims to reach approximately 30 gigawatts of installed solar photovoltaic capacity, significantly expanding its renewable power generation. Renewables are also expected to supply around 30% of Taiwan's electricity mix by 2030. Achieving this transformation requires substantial private capital investment, creating one of the most dynamic renewable infrastructure opportunities in Asia. For global investors, Taiwan's solar sector is rapidly becoming a key growth market. A specialized renewable energy investment platform has been quietly developing solar infrastructure across Taiwan. Over time, the platform has built a substantial portfolio of solar photovoltaic projects, supplying electricity to industrial and commercial customers. The investment strategy focuses on utility-scale renewable infrastructure, including aquaculture solar hybrid projects, ground-mounted solar plants, industrial rooftop solar installations. These projects typically operate under long-term corporate power purchase agreements, meaning the electricity is sold through contracted arrangements with commercial electricity consumers. This creates predictable and stable revenue streams, which is one of the key attractions for infrastructure investors. The equity investment platform has appointed KSC as placement agent to engage with international investors interested in participating as limited partners in Taiwan's growing renewable energy market. Like most major infrastructure assets, these renewable projects are financed using project finance structures. Under this model, individual power plants raise non-recourse debt financing, where lenders rely primarily on the future cash flows generated by the projects. Local banks in Taiwan have played a significant role in supporting renewable infrastructure development, providing syndicated project financing facilities for multiple solar projects. Because financing is structured at the project level, investor capital benefits from financial leverage while limiting exposure to unrelated business risks. This type of structure is widely used across global infrastructure sectors, including energy, transportation, utilities, and telecommunications. Several structural factors are driving investor interest in Taiwan's renewable energy sector. Electricity demand continues to grow due to the island's high-tech manufacturing industry, while government policy strongly supports the expansion of clean energy capacity. Combined with long-term power purchase agreements and project finance structures, solar infrastructure projects can generate stable, predictable cash flows aligned with institutional investment strategies. As Taiwan continues expanding its renewable capacity, opportunities for global capital participation are expected to grow significantly. Taiwan's renewable energy transition is not only about sustainability, it is also about how global capital is financing the next generation of infrastructure. Please like and subscribe, and tell us in the comments. Would you invest in renewables in Taiwan?